Hey everyone, this is part 1 of my interview with Chris Marchese and David Morgan, talking about their newly released book, The Silver Manifesto. In part 1 of this interview, we discuss silver's history as money, and also the emergence of fiat or paper money, and how these fiat paper monetary systems have always ended the same way, and also how fiat paper money controlled by a government threatens your liberty. Make sure to subscribe here so you don't miss the release of Part 2. In Part 2 of this interview, we discuss the silver bull market as it stands today, the supply and demand dynamics behind silver, and why the biggest moves in silver are yet to come. Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and with us today is Christopher Marchese and David Morgan, the authors of the Silver Manifesto. Thank you, Chris and David, for being here.
Well, thank you for having us.
Yeah, it's great to be here.
All right. Well, I would like to first talk about your book that you both recently published. I guess starting with David, do you want to give us an explanation behind the name Silver Manifesto?
Sure. It was something that was very hard. I mean, putting a title on a book sometimes is what will make you or break you, meaning that a good title on a lousy book will actually sell a lot of books, and you can have a really masterful book written and with a poor title and not sell many. So that wasn't the primary reason, but it certainly had, factored into our thinking about, what to name the book. So if you go to the book, I actually address that in the book of why would I, pick the name Silver Manifesto. And as it says in the book, that I start off with the definition, which is itself derived from the Latin root manifestum. It's a published verbal declaration of intentions, motives, or views of the issuer, whether it be an individual, group, or political party. A manifesto usually accepts a previously published opinion or a public consensus and or promotes a new idea with prospective notions for carrying out changes the author believes should be made. So to paraphrase that, the old idea going back in history was silver and money were synonymous. In fact, the word silver and money are synonymous in all the Romance languages. But that's been lost. In the current vernacular, everyone thinks that silver is just an industrial commodity, if they think of silver at all. And so basically the manifesto is to get back to the roots. So really it's a reestablishment. So it's kind of the current idea going back to the original one, which is silver being money. And as I've said many times, Elijah, and you're probably tired of hearing it, but we always have new listeners, that silver is the monetary metal of history, not gold. And that's a fact. Gold certainly is a monetary metal, and gold is money. I don't dispute that. But in the long-term scheme of things, silver has been used as money more places, more times, and far more transactions on the planet for commerce than gold ever has. And that's indisputable. In fact, the statement was made by one of the leading economists, it's the Nobel laureate at the time, Milton Friedman. So that's the basis of the book, and it goes on from there, of course. But we really wanted to give an in-depth look at silver from, alpha to omega, from the beginning to the end, meaning its history in the United States, what it means from all kinds of aspects: industrial use, monetary demand, the economy. Chris argued with me and won, and I'm glad he did. That's extremely important to put in the fractional reserve banking, which a lot of readers will know, but some won't, and how that plays into the fractional reserve bullion banking, and how that is the adjunct to manipulate the market in a fashion that the users of that technique may not call it manipulation, they just may call it market preference, although I would argue against that. We make that clear in the book. And then I have a chapter at the end, which was pretty much solo, which talked about beyond silver, which addresses all kinds of problems that we have in a global on the planet itself, beyond the monetary question, which has to do with the environment, the political structure, why are so many people at war, and those type of questions.
Definitely. And you start at the beginning of the book talking about how silver has been money throughout the ages, and that the U.S. Constitution actually says nothing but gold and silver can be money. I guess, did we want to start with Chris here and expand a little bit on that?
Sure. Yeah. So I think it's Article 1, Section 10 of the Constitution. And, it says exactly that. And the Congress can't emit bills of credit and that type of thing. And it hasn't been amended. So everything in there is, silver and gold are still constitutionally money, and paper is not. They passed legal tender law, which made paper money except as a medium of exchange. But the Constitution supersedes everything. It's the highest law in the land, or it used to be. Now, it's not even paid attention to, and even by the Supreme Court. That's a really sad state of affairs. But it was because our forefathers had such great insight, notably Thomas Jefferson and Andrew Jackson, about how if, the government had a monopoly control of the mint, chaos would ensue in terms of monetary chaos. And that's exactly what happened.
Definitely. And what is your perspective on this, David, that really in the Constitution it says that only gold and silver can be money?
Well, yeah, I'll take a funny take on it. I've said this many times, but I've always tried to think up ways that might involve the government entities. So actually, I'm familiar with the county treasurer here in the local municipality, and I brought it up at an event that he had. And of course, he knows me, he knows what I do, and he's pretty aware of the monetary problem. So I asked the question, is a property tax a debt? He said, oh, yes, it's a debt. And I said, well, since it's a debt, I just discovered I've been frauding you. And he says, what do you mean frauding me? Now, this man knows me, and he's partial to the honest money situation. I said, well, since it says that I can only pay a debt in gold or silver, I've actually been sending you this private script from a private bank in payment of property taxes. Have I frauded you? And of course, Chris has already answered the question, because the answer is not really, in quotation marks, because legally, the legal tender laws make it acceptable to pay in a private banking script for county taxes. But the question has been brought before, believe me, and I've looked at a few of the cases. But if you go by the law of the land, which hasn't been, how do I say this because I'm not a lawyer, it has not been rejected, it still stands. But the only way it will be accepted is if you use face value coinage. So let me address that. What is he talking about? So if I use silver eagles that are stamped $1 and my tax bill is $800, I could take 800 of those silver dollars into the tax assessor, put them on the counter, say I paid my tax, and they give me receipts, say paid in full. The problem is we all know those are worth 20. They're the equivalent of 20 private banking script roughly today while we're doing the interview. So I've overpaid my tax bill by 20 times if I chose to use silver. And therefore, no one's going to do it that way. But the idea that is, very clear that we wanted to get away from this bizarre situation where a private banking script could have that kind of devaluation, which of course it has. So hopefully that makes some sense there. It's not off the books. It could be done. Obviously, functionally, it would be stupid to do it from the example I just gave, but it is something that's legally could work the other way. In other words, we have on our website, the members section, a treatise written by none other than the greatest constitutional scholar out there, Dr. Edwin Vieira, on how to do gold and silver transactions. And that's not only to do with if you have a business, it has to do as one of the people on how to do it, in your everyday life. Now, I'm not saying it's easy, and I'm not saying it wouldn't require some study, but it is available. And it can be done.
If I can interject really quickly, Andrew Jackson, when he broke the second bank of the United States, the then central bank of the U.S., only U.S. coinage, silver coinage was accepted. But he made it so, his rationale was silver is silver is silver. So from then on till 73 is when the silver standard technically ended. Mexican coins were used and all other world coins. So in that case, if that were in existence today, you could put a higher face value and they would have to accept that or the market price. But that didn't hold, obviously. And we go through two of the Supreme Court rulings regarding the use of fiat money. And basically what they did is it was rejected the first time, and the second time they just stacked the court. So it would inevitably be okay to use fiat money.
Now, I'd like to move our focus. You discuss a little bit into the book that basically fiat money was first introduced in China about 2,000 years ago, and then eventually around the 1700s was it introduced in the West. Did you want to discuss, I guess we can start with David, about why this fiat money was introduced and how it seemed like every single time it eventually failed?
Well, it has a failure rate of 100% because at some point people realize that it really has no value, and it's almost always abused, meaning that it's devalued because in theory a paper monetary system could work if it was commensurate with the amount of goods and services that are out there in the free market. But what happens is there's more and more issued against, or greater amount issued versus what the real economy has to produce. And because of that fact, it gets diluted. So as it degrades more and more, people lose faith in it, they lose trust, and they finally give up on it. So that story is repeated again and again. But to interject, I mean, when Marco Polo went to China and having come from Europe and saw paper and then realized that this paper money, quote unquote money, this currency, was used as final payment, he was just couldn't believe it. It was like, how can this be done? Why would these people accept a piece of paper as final payment? But in his consciousness and what his experience was is that no one in his area would do that. But here it was. And of course, it didn't take long for that one thing to take over Europe as well. So I think Chris could probably add on a lot more than what I've said, but it's very fascinating how one of the oldest cultures on the planet certainly was the first one to start with the paper money idea.
Yeah, China, when they first started, they kind of used metal and paper money at the same time, but they gave advantages to those who used paper money. And eventually, they required its citizens to use it more and more, and eventually it failed, but not due to a currency collapse or hyperinflation. Just the paper money was so debased after a while that they just effectively did what would today be called a monetary reset and started over again. And this continued for quite a while until they went back onto a silver standard in I think it was the 1600s, but don't quote me on that.
Now, did you guys want to discuss a little bit about why it's important, as we've seen throughout history, the government, takes control of the monetary system and then abuses the currency and the currency finally falls. Now, you both discuss in the book about how we should be on a bimetallic standard, not a monometallic standard. Did you want to discuss the distinction between those and why it's important?
Well, there's a lot out there in the, what I refer to as the honest money camp, and you don't really hear it referred to too much, but the precious metals camp or the gold community or precious metals community, however you want to phrase it. I really don't care what label you use. But there's a lot of people that are advocates of a gold standard. And I'm not against a gold standard, but I do know after I was actually open-minded enough to look at a series of papers that were done by a gentleman that wrote these papers called Gold One Step to Fiat, or Gold Standard One Step to Fiat, something like that. It's still on Gold Eagle. You can probably find them on the search engine on Gold Eagle website. But his idea is that once you have control of the monetary system, and the old adage that he who owns the gold makes the rules, well, going back not that long, central banks owned the gold and they made the rules. And in today's world, it's probably about a 50-50 split if we can believe the data from, let's say, the World Gold Council. But at one time, there was a bimetallic standard, and that was what the Wizard of Oz was all about. The Yellow Brick Road was the Eastern banking establishment taking over and getting silver out of the monetary system in 1873 that we referred to, or 72, I forget which, but in that time frame. And made silver a non-entity in the financial system or in the monetary system and a gold-only standard. And that's, again, what the Wizard of Oz really was all about. It's a metaphor for that happening. And when you have a monometallic system and you own most of it, then you get to control how it goes. So basically made a lot of people unhappy, especially in the western half of the United States that were using the silver standard, and certainly were taken by this Eastern establishment going to gold-only standard. Probably enough said on that. In a bimetallic standard, you can have the ability of one metal to take control over the other metal. Let me rephrase it. With a bimetallic system and free floating, where it's not set by edict, where 15 and a half or 16 ounces of silver equal 1 ounce of gold, but where the market itself determines, where sometimes it's 12, sometimes it's 16, sometimes it's 20, sometimes it's 8, whatever it may be, the market determines what the correct ratio is. If that were established, there'd be a check and balance on the monetary system itself. And really, if you want to get technical, I would probably, at least in theory, favor a trimetallic standard, where back in the 1800s you had copper, silver, and gold, and let that float as well, where you'd have so much copper equaled so much silver, so much gold, and all those could float against each other. The problem is, of course, in that time frame, especially now, it wouldn't be a problem really, but in that time frame, you go in thinking that so many pounds of copper equaled an ounce of silver, and then you find out that it floated. It would be hard because there wasn't the electronic communication systems that we have now, so it'd be difficult. But the idea was that there would be a check on the system, and with a fixed system, there is abuse that can be taken because Gresham's law can take over, and one could be undervalued relative to the other, and that is something that was taken advantage of a few times in monetary history.
And I'll just start from the beginning. But so deflation is actually a good thing. It's a great thing, not for debt holders. It punishes those that are massively overlevered. But if you just take a second and think about it, deflation is a result of increases in productivity. And of course, this is assuming a fixed money supply, because there's no reason for the money supply to ever grow. So if you keep the money supply fixed, deflation would occur because like the technological revolution with the internet and related technologies, that really enhanced productivity of a lot of things. Therefore, the costs were driven down both to the producer and then passed on to the consumer. But inflation is obviously the government's prerogative. They're the ones that get it first. And in inflation, those who get the money first benefit at the expense of everyone else. And so a bimetallic standard, at least in my opinion, is much more superior in that it would allow society to determine more quickly whether the government was inflating the money supply. Because as David mentioned, Gresham's law comes into effect, whereby the undervalued money flows out to other countries. And this continues until it has completely gone, and the overvalued money continues in circulation. So that's a much tighter check and balance. And with a bimetallic standard, or monometallic standard, if governments all went, say they decide to go on a gold standard or a silver standard, they could collude and inflate their respective supplies of money and credit at the same rate, thereby making it more difficult for consumers or society to determine whether they were inflating the supply of money and credit, because no metal would flow out to one another. And under a bimetallic standard, that's impossible to do. So that's it in terms of adding on to what David said.
Definitely. And you mentioned about how deflation really isn't a bad thing. I guess turning to David now, did you want to talk a little bit about this? It seems like, the government, and the Federal Reserve say that deflation's this horrible thing, so we should aim for a low rate of inflation instead. But is that really true?
No, it's not. It's one of the great misnomers of the power elites, really. The idea that they present, especially in what's taught in economics, the Keynesian schools, is that a little inflation is bad. Is good. A little inflation, well, we have to keep up with the growing economy. If we have a little inflation, that's stimulative and it's a great idea. But as Chris just outlined, and I can't really say any better, is that in a very robust, strong economy where you have strong employment and the market determines, wages and everything is left on more or less a laissez-faire methodology. What you have is a robust economy that continually improves because people are creative. And someone that's a good inventor of some product usually wants to make the product better and better. And the market itself is good at determining how to make a product better. For an example, let's just take one I'm fairly familiar with, solar panels. Solar panels have been around for a while now, but the amount of silver used per panels is becoming less and less. And there is probably a limit to that. But there's more panels produced than ever on an annual basis, but the amount of silver used in the solar industry is lower than it was a couple years back. How can that be? Obviously because the product has been improved. And that's what happens throughout the economy. Does that mean every single product out there gets improved upon? No, that doesn't mean that. It means that a great deal of them do. So this means that you get more for your money as time goes on. And that means you get a general deflationary effect throughout the entire economy. And that is a benefit to everyone because everyone becomes better off, richer in their lifestyle, or living standards goes up and up and up. And that's what you want. So to try to teach that, try to illustrate that, and try to actually give that idea that a general deflation over time is a benefit to all people is a very hard one to construct, but it's very true. That's the actual economy and how it would actually work. And that's why if you go into an honest monetary system, you do not need a financial planner. You don't need someone to tell you, well, let's assume there's going to be, 4% inflation, and we can do better than that by 2%, and we're going to put you in this kind of bond, we're going to put you in these kind of stocks, we're going to drop you in this kind of mutual fund. Never put you in the metals usually, unless they're a very sophisticated financial planner and understand what's going on. And so all this stuff is hocus pocus dominocus. It really means nothing because no one knows what the future inflation rate is going to be, and no one knows that it can beat it every year. But they'll tell you that they can. But in an honest financial system, the money is a constant. So if you need to have $20,000 a year to retire and you're 30 years from that date, you will know that 30 years hence that $20,000 will be all you need and probably less because the economy keeps improving. People are productive, people make improvements, and the economy continues to get really more and more robust. Things get, and that doesn't mean there aren't new products. Actually, it means just the opposite of what you would probably learn in school where you're taught, a little inflation is good and we didn't, we have to increase the money supply because we won't have enough money and all this nonsense that people never really get to think through clearly.
We actually said in Chapter 2, we noted that over the period of, I think it was 1895 over 1805, the purchasing power of the dollar had doubled, which is a fact most people aren't aware of. That the U.S., they thrived during a long deflationary period, even if there were years of inflation, which there were.
And I'd like to get to a really major point of your book. You talked about that basically if you have this monopolistic control of money by the government, you can't really have freedom in society. Did we want to start with Chris on this?
Yeah, the people's money or the market money has always been gold and silver. And as we show this in chapters 1 and 2, that's what's always been chosen. And even with advent of handwriting and correspondingly journal entries, silver was a unit of account. So due to the physical attributes which Aristotle outlined as the most ideal for a commodity money, that is, it is malleable, durable, divisible, portable. Anyway, all the characteristics, they perfectly describe the precious metals and really nothing else. Scarcity is another one. So David mentioned copper, but David, what would you think about copper today since, mining technology is so much more advanced? Copper may not even be the third metal if we were to adopt a trimetallic standard. It could be something like palladium, or, we just don't know.
I think the market would figure it out. It's sort of, but the idea is 2 metals are good. 3 is probably the optimum, but that's more theoretical than anything else. But the idea of just a gold-only standard, I just want to reiterate that alone is a stepping stone to control by an elite group, and then it can move from a gold to a gold cover clause to a partial gold standard, and then they basically wean you off of it, and all of a sudden you're back on a fiat system. That's the point I wanted to make the most.
Yeah, and even J.P. Morgan said gold, he meant gold and silver is money and everything else is credit. So even he recognized it. And the Morgan family, they're not so well liked anymore, obviously. But, there were a lot of intelligent men back then who realized how important it was to have honest money, because it was synonymous with freedom. The inherent nature of government is to usurp as much power as they can and influence over its people. And the main thing is getting monopoly control of the mint. Once you have that, everything else follows. And that's why it's just so vital to having real freedoms, which, unfortunately we don't have anymore, that, we have an honest money system, because if we did, our freedom and liberty would follow.
All right. Well, Chris Marchese and David Morgan, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find your book?
Yeah, sure. The book's easy to find on Amazon, and we have a web page set up. It's called thesilvermanifesto.com. And for all the readers of finance or listeners of financeandliberty.com, we have in the book, there's a page that will give you a discount of 25% on the Morgan Report. So that's something to bear in mind. But there are some issues going to Canada, which are resolving. There will be an electronic version out shortly, and we're working on an audio version. So if you want the audio version or you're waiting for the electronic version, I'll just tell you, go ahead and just wait probably a couple of weeks or so, and you'll be able to get those versions of the Silver Manifesto.
This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Prepper's interview with David Morgan. Now for a clip from the interview.
The fact that governments fail is the point that most people cannot conceive. They conceive of a bank failure, they conceive of a business going out of business, but they cannot conceive that a government can fail. Yet history teaches us again and again and again that governments do fail, that this one is failing, and that you cannot rely on anything coming from them to be, 1, truthful, or 2, to your benefit.